Alrighty, what is going on, everybody? Happy Tuesday. Happy Tuesday. It is the 6th of December. December is flying by so far. We're almost at the end of the year, entering another really great year as far as trading goes. Oh, you know what? I guess it would help if I had the chat up. How's everybody doing? Can you guys hear me okay? There we go. Cool. Alrighty. Awesome. And let me just, can you guys hear me? Alrighty, what is going on, everybody? Yeah, I think you guys, perfect. Okay, cool. Awesome. Well, let's dive into it. So obviously we had NFP last week, and if you looked at, everybody should have looked already at the calendar for this week. Not a lot going on. I think really, if you're paying attention to the fundamentals, the market's going to be grasping for what happens next week. And next week is going to be essentially it's going to be the big deciding factor on what I'm going to be doing with the US dollar. For me, it's going to be pretty distinct on whether or not we're going to continue bullish dollar, or if we're going to get our pullback back into some more discounted pricing. And what I'm talking about is obviously federal interest rates for the US dollar. The Fed is going to release on Wednesday what it plans on doing. And if you guys aren't, this is something I spoke the other day to everybody in my group. If you're not watching what probably the most powerful and influential person in the world is speaking and giving clues on, you're doing yourself a disservice, especially when it comes to understanding the fundamentals and how you're essentially prioritizing what you're trading. And obviously who I'm speaking of is Jerome Powell, the chairman of the Federal Reserve. Every little hint that he drops, whether it's intentional or not, is what the market reacts to. So obviously, if you paid attention to what he was talking about last week, in a nutshell, he said that if obviously inflation is going to continue, the reason for the interest rate hikes is to thwart off that inflation. Of course, the death circle, as I call it, of raising interest rates to thwart off inflation counteracts an expansionary market and actually goes into more further contraction, which we're already in a recession. So, ideally, the recession is going to be prolonged until inflation can get under wrap. And once that happens, then we can see an easing of the Fed with interest rate hikes, which should start to open up some more lending so that manufacturing and businesses can expand to get us out of a recession. Obviously, so from an economic standpoint, it's just a big circle of death, and it's unfortunate that we're dealing with it. We haven't been in a real recession in, what do we say, like 12 years. So it's been a while, and most of you probably weren't even trading back then. So what I'm looking at from the Fed's perspective is obviously we're going to continue to raise interest rates. It's a no-brainer. The question is, how much? And if you looked at what next week, what the market's already pricing in, they're pricing in a 50 basis point interest rate hike, which is definitely less than what we got last, the 75 basis points. So we're starting to see potentially I'm not going to even say they're putting the brakes on, because they're not. They're just easing off the gas. And I don't think the market is really ready for continuation in interest rate hikes at the level at what we're seeing. So I do think the dollar is going to be temporarily going to be continuing to go bullish. I don't think that's going to be the catalyst for us to get a deeper pullback on the dollar, especially when you look at what's going on globally. Right. And that's something I've been really paying attention to is, you've got, if any of you guys were watching yesterday, what happened with the Bank of Japan, they flat out came out, and pretty much what happened a couple of years ago with the Swiss bank, they've come out and said that they are going to do everything in their power. And this is the Bank of Japan, right? The central bank is going to do everything in their power to ease the pressure, or the selling pressure on the Japanese yen. So, if you don't know this, obviously, the Japanese yen is the diametrically opposed asset to US dollar Japanese yen. So if they're going to be doing everything in their power to thwart off that selling pressure, that means that UJ is going to be coming down. So with that in mind, I'm not very interested in trying to buy yen crosses. I'm going to wait to see if it's obviously just a little tongue in cheek action where they're not actually going to be putting their money where their mouth is. But if they do, and we start to see that appreciation in the yen, it's actually setting up for some really good shorts. UJ, I think we were looking at UJ and EJ today for shorts, and potentially even AJ if it can give us the redistribution, especially with the Australian dollar being as weak as it is. So from a fundamental standpoint, everything yen crosswise, I'm just kind of sitting back waiting to see what the Bank of Japan is going to do. I don't need to catch the top, right? I mean, if you looked at UJ to get down into structure, it's like 1,500 pips. It's way more to get down into the extreme, but I'm just talking about like the leg structure. I don't need all 1,500. I'll be happy with like 1,000, So I'm going to wait and see and kind of just be patient with what the Bank of Japan is going to do. And obviously we're seeing continuations on the Australian and Kiwi dollars just being weak as they can be. Last night, the Australian dollar interest rates came in at I think it was the 30 basis points is what they were projecting, and comes out exactly at that. So we really didn't see any kind of volatility in what the Australian dollar has done. But tomorrow night is going to be, for me, something very, very important. It's going to be Canadian dollar, and you can see they're pricing in the same thing, just like next week for the Fed. It's 50 basis points is what they're looking at. So going into my preparation for the week, I already knew that the Australian and Kiwi dollars were going to be on my plate. So that meant that AU, A-Chef, and ACAD were three that I was going to be paying attention to, and NU and NCAD as well. I really don't trade NCHEF. That's that I'm asking for it with that spread. So ACAD, AU, and ACHEF, those were ones I was really paying attention to. And because of what's happening with the Canadian dollar, I really don't need help from the US dollar when I'm looking to trade USD CAD. And, if you've taken a look at Canadian futures, we're still bearish as can be. It's following, if I've talked about soft currencies before, right? They're if you want a really easy definition of what a soft currency is, as opposed to a hard currency, soft currencies are the opposite of safe havens, which are hard currencies. So your Australian dollar, your Kiwi, and your Canadian dollar fit this bill. They're anti-per diems, soft currencies. So that's why they're very, very much depreciating, right? We're in a risk off sentiment. There's no risk on, meaning these three are going to be depreciating. So with that, I'm going to be taking advantage of it. And if I'm shorting, if I'm looking to short the Australian dollar, the Kiwi dollar, and the Canadian dollar, well, that means that the asset to those futures are what? Are AU, NU, and UCAD. So that means shorting AU, shorting NU, and buying UCAD are really what I'm going to be doing. So, kind of organizing my thought process on what I'm going to be doing. My essentially my primary list is going to encompass, ACAD, NCAD, and UCAD, and I'll be buying UCAD. I'm looking to short NCAD and ACAD. I am shorting AU and NU for that matter as well. And I'm also shorting ACHEF as well, because it is very much bearish. And we did catch some good plays on it last week. So really this is my game plan for the week. And then of course throwing in indices, because I'm bearish as can be on indices. So that's really what I'm looking at. And then I'll talk about Euro GBP. There has been November. If you get a chance, I would, and this is something I told everybody in my group, backtest Euro GBP in the month of November. There were some really good plays. I caught some really good plays over the last 2 weeks. Caught a play yesterday, ended up hitting break even, but I still took a pretty decent amount of profits out of it before it did. So looking at the fundamentals, that's really what I'm basing my week on. And then, Friday, if we do come into the inflation numbers, it is what it is. We'll see some volatility Friday morning, but leading into Friday, everything is really going to rest on this right here. So that's kind of how my game plan for the week, my preparation went into it. And yeah, we'll jump into charts. Any questions? Anybody have any questions on that? It's pretty self-explanatory, pretty easy to follow. There we go. All right, cool. So we'll start with the dollar, right? We'll start with the dollar here. And, again, there we go. So what I'm very much interested in seeing us do is I want to see, do we come lower with the dollar, right? Do we come down into some structure, or do we continue to play continuation move and essentially come out of supply? So what I'm very much interested in looking at is what we do here. And let me go blue. There we go. What we do in here is going to be essentially the deciding factor for me. Because if we end up, and you can see I've got this boxed out, I've got an alert up here, I've got an alert down here, and I've got an alert even at the 50%. So if we come in here and I start to see sellers coming into this market, right, that's just going to give me confirmation that we're going to short. If we don't see any of that and we end up going higher with this, right, and then for all intents and purposes, we've accumulated. And now the next area that I'm going to be paying attention to is in here for shorts. So it's really important to kind of figure out what I want to do with it. All right. And then we'll see. It's there we go. It's going to be important to see what price does for me. And I'm really going to be obviously waiting for, and I think we're going to be here for a while. I think this is just going to kind of play itself, maybe something like this, and then we go higher. That's ideally what I think we're going to do. But right now, for me on the dollar index, this is really what's going to be the focal point for me for the week. I'm really not interested in trying to trade anything on the dollar that's being driven by the dollar. So what I'm talking about is EU specifically. I'm not really interested in trying to trade EU. And coming into just a lower time frame, order flow's already been broken. Not very much, not by very much, but it has been broken. And what I'm talking about is from last week's news, right? We essentially redistributed here. And when we broke this high, we took out that high in here. All right. If you look at EU, where we're nowhere even close to taking out the low, EU is like somewhere down here. So EU is definitely lagging behind. And I'm just going to sit back and wait, right? For me, EU does not interest me one bit to trade it this week. So, and really nothing being driven by the dollar is interesting me. So what I need to do is I need to go after currencies that are not being driven by the dollar. Enter in AU and NU and also UCAD, right? AU and NU is not being driven by the dollar right now. Its weakness is definitely predicated off of just solely the Australian dollar and the Kiwi dollar. So when I come over to look at like AU and NU, it's really, really simple, right? I don't need to worry about dollar strength to try to trade this. What I can do is just come over here and look and say to myself, okay, so what do we have? What can I use? And we've come into structure, right? We've come into the slingshot area. Here we go. We've come into my slingshot area that created. So here's my redistribution that created this break. All right. Bear with me 1 second. All righty. Sorry, everybody. Had to get my, had to order some food in. It's travel volleyball season again. Anyway, so what I was talking about, we've come in AU, we've come into my slingshot area. And, obviously it's, I was hoping to see we can get into this 80, but we are in the area that I want to see. And, so this is maintaining my structure leg, right? You can already see that we're in a pretty decent distribution. We've got some ice being built up here. And could we get a UTAD that comes into that? 100%. Actually, I'd be pretty happy if it did. I contemplated last week, I did have a sell limit set out of this type 1 distribution that's up in there. It was like a, I know off the 50%, it's a pretty large stop. It's like 17 pips, but off the 80%, it looked pretty clean. So we could get that appreciation to come up here. All right. Now, if we don't, what I'm going to be looking for is, and you can kind of see how this is shaping up. We do have a type 1 distribution that sits right here. All right. And I just need to see what we're doing down here. If we go ahead and we break this low, which is maintaining our order flow, right, because of this break here. If we end up selling off like this, then I have no expectation that we're going to make a UTAD. I have every expectation that this is just going to be a type 2 schematic, and I'm going to play continuation moves to the downside. All right. If we do come in and we start to see an accumulation, something in here, maybe like this, and then we come up, all right, that's fine. This is where I want to sell from anyway. But I am going to be prepared I have 2 points of interest just simply off of this that I'm looking at, right? I'm looking to see, do we come into, this is our manipulation. So this is the 50 and the 80 of it right here. This is essentially my X marks the spot. This is where I want to wait to see if I can get a distribution out of. I really like the area simply because this is my slingshot redistribution that causes the initial break to give me the major sign of weakness out of this schematic. So I have my alert set right around here, about just below the 6,800 level is where my alert is sitting. And ideally, I'm going to wait for a schematic in this area here, or, if we do, unfortunately, this is holding Asian liquidity, right? So I'm not going to set a limit out of the 80%, but anywhere in here gets me to go. All right. We're about 100 pips, give or take, from that area. So hopefully we can get up here tonight and into New York tomorrow, or even like a Thursday play for me. I don't mind if I have to wait for Thursday to get in here and short it. And that's ideally what I'm going to do. I like the setup on AU. It's definitely giving me reason to look for the shorts, and we have a really good idea of where I want to take this down to, right? There's a tremendous amount of, just saying if it comes into that 50% to the initial break of order flow, it's going to be a 211 pip plus move, and then ideally getting into where our next area of demand is going to be. It's already about 370 pips. So there is a tremendous amount of downside potential that I like in it. And obviously it can go a whole lot lower. So that's what I'm kind of waiting for, but AU is definitely on my list, something I'm definitely going to be looking to get into with. All right. Same reason, NU, right? NU, what I'm looking for from a higher time frame perspective, we are in structure, right? We have come into where price is maintaining its leg, and we've distributed out of it. So what I'm looking for is now to short this as much as I can. And again, I don't need a lot of assistance from the US dollar for this. So what I'm looking for is ideally the same thing, right? We've confirmed our break. I was expecting this accumulation, and hopefully this accumulation is what gets me into either here or here, so that we can take this lower, and then ultimately this will be my redistro. So I'm looking at the same kind of price action between NU and AU. I know it's a type 1 on the lower time frame, but on the higher time frame, it's a type 2. Doesn't that mean that the whole leg, including the type 1, is in a manipulation, since there's no manipulation in type 2s? So Yes. So what you're asking is it's a type 2 on the higher time frame. It's the third drive of the type 2. Yep. So yeah, I agree. Does that answer your question? I was just wondering why there's still a, you were wondering why that's still a POI? Why wouldn't it be a POI? It's the third drive, is it not? So I'm in my third drive of a schematic, right? And if we break order flow, I'm not expecting a UTAD. So why wouldn't it be a point of interest for me? I guess if it's not a point of interest for you, then yeah, that's all you need to worry about. But while I thought you play on manipulation, I am playing on manipulation. That's my manipulation right here. This is my mitigation of my manipulation. Does that make sense? Yeah. It's my third drive. So I could start looking in the third drive if it's coming into my point of interest and we break. Yeah, absolutely. Yep. So AU and NU, very similar. That's what I'm looking to do with those. Now on there, yeah, I won't put a limit on Asian liquidity because this isn't a line in the sand, right? We could come up into here. So this is something, if I were you, I would decide whether or not you want to put a limit in that. So go back. I mean, you could see it from a 4 hour. It's a really clean type one. That's something that you'll have to make a decision whether or not you want to put risk on it. But yeah, I would definitely not, or I can tell you what I'm not going to do. I'm not going to have a limit order out of here. I'm just going to play the price action. And if we come higher, depending on when we come higher, I can tell you there's going to be a pretty good chance if it's within my trading time that I will have a limit order out of that 80%. So, yeah. What's up, bro? Would you still take an entry if price comes up before taking the low? You mean before taking this low? So I really need us to take this low here before I do anything with it. So, because all we've done is realistically, we've traded into the reaccumulation SC that's created the order flow like this. So what gets me to take a short out of this price action here? So I will take shorting opportunities from here, but my risk is going to be reduced because this is not going to be a high probability setup. I can tell you that if we accumulate here, I definitely won't be taking anything out of here. So if this ends up being an accumulation in here, then this is done. I'm not even looking at it. Yeah. So, but if we come up, so like say tonight we come up, we just come up and we're in here and then we get, that's our London open. Would I take a distro out of it? Yeah, I would. I'm going to reduce my risk simply because we're still bullish order flow on this. Even though we've come into here, I'm willing to take a risk, but I know that we can still come a little higher because that's where I'm anticipating us coming up to. So that's how I'm going to play it. Yeah. All right. So that's AU, that's NU. We'll do ACAT and NCAT as well. So again, similar price action. Now, obviously the Australian dollar has been leading for the past couple of months, actually probably for almost like a year now. It's been the leader and the Kiwi's been the laggard. And same area. Like what I'm looking at is this right here on ACAD is what's maintaining my leg structure, right? This is where we break. This entire thing is my leg structure. So ideally, what I'm going to be waiting for, I wanted to see us sweep out all of this here and play into this, which we did. And from there, what I'm looking to do is, you can see we've got a little bit of divergence, right? We have a distribution here. And the divergence is NCAT actually trades up and creates the UTAD up here. All right. So what I'm looking to do is on ACAD, I'm really not interested in doing much with ACAD until we break this low, simply because I need weakness on ACAD for me to short it. I don't necessarily need to wait for the low, but I need at least NCAD to really give a push to the downside as well. And I mean, this is ideally what it's looking like. So we've, there is a distribution that happened in here, but and it's pretty much already mitigated. But until we actually break this low, I'm not going to be doing much with it. I want to use ACAD's weakness because it is the leader. ACAD needs to break this low first, and ideally it will break the low first before NCAD. So that's kind of what I'm going to be waiting for, is sit back, wait for this break. It's only, and realistically, we're talking like 42 pips, something like that. It's not a large area of real estate that needs to be covered. So we break this low, and ideally I'm going to be looking for continuation shorts, meaning like redistros. On the NCAD front, now NCAD, very similar to what ACAD did. All right. And again, where are we? We are in the leg structure, right? This entire move here is what's maintaining this entire leg. This is the 80% of it. This is where we traded into. So we are in a very premium area. I do like where we're at. And, what did price do today? We created that, you could see here, we created that divergence. So this is the fourth drive. This is our fourth drive of our schematic, right? 1 drive, 2 drive, 3 drive, 4th drive that took out the high, and we had a distribution in there. So, what I want to see now from NCAD is I just want to see continuations to the downside, right? I want to see price give me now and it looks like it's setting up for a redistribution, because you could see the accumulation. I want to see maybe we come into this, right? We come into this to mitigate it, and then we break, confirming another redistro. And I just want to walk this down. All right. Ideally, the first targets are going to be this Frankfurt low, but realistically, to confirm the entire distribution, let's just say price comes into that, to this low, it's a 95 pip move. So that's ideally what I'm going to be trying to catch, is something in here to take down, to break, give me the BOS. This will be my MSAL. And then I'll want price to come back and give me a test of the distribution of this UTAD before going lower. And if all of that works out, then I'll be really positioned nicely with NCAD and ACAD. I'd prefer ACAD because ACAD on most of my brokers is under a pip spread, where NCAD is pushing like 1.5 to like 3 pips. So did you get in on that order at the top? I did. Yeah. Yep. Yeah. So we'll see. Ideally, we have Canadian news tomorrow. So I'm expecting a manipulation out of that news. So maybe that manipulation is going to be our shakeout, right? Ideally, potentially maybe something like this. This is the news candle, right? And then we confirm the redistro, mitigate, and then go lower with it. So that's ideally what I'm going to be looking for. All right. Yeah. And so NCAD and ACAD pretty similar, AU and NU as well. The other one that I'm really focused on is UCAD. And so here's UCAD from a bigger perspective, right? So again, I'm still very much bullish on UCAD. I know there's a lot of people trying to short it. Good luck to them. This is still massively bullish. And what I really wanted to focus on is, I said last week that if we were to break this redistribution here, right, this redistro, that I was going to start looking for those buys. And obviously you could see once we confirm this next reaccumulation, yeah, this is where I'm looking right here. This is where I want to see if we can get price to give me a pullback so I can buy at a discount. And this is really what I wanted to see this morning. I just wanted to see us pop up above the high, which we did. And now I'm going to be looking for us to come back down and essentially mitigate. Why is this even moved? So there we go. So essentially what I want to see is I want to see us mitigate in here. I'm going to put, I don't know where my alert went, but I'm going to put my alert here at the 3,500 level. Yeah. So I'm going to be waiting for price. Somewhere in this 80% is where I'm going to be waiting for price. And how I'm going to market this is, price gives me the price action to get in via a schematic. My first targets are going to be this high. And then my next targets are going to be just walking this up, taking out supply. So, and what I'm talking about is I want to target into this redistribution here, right? So somewhere in this candle, somewhere around like the 3,800 level is where I'm going to be taking my next partials. And then obviously if we get above this, then we're reaccumulating, right? We'll be taking this high and that'll be my next target. So that's ideally how I'm going to manage it. So come in here, we accumulate. First target's going to be this high. Second target's going to be into that supply point. And then if we get through that, then I'm taking out this high and I'm going to hold my runner until we go higher with it. Yeah. The low where your box is on today's reaccumulation on UCAD doesn't hold anything for a limit, right? Since it's order flow. The low, hold on. If you're talking about anything from today, correct. It doesn't hold anything. So you're talking about what in this? No. Yeah, this is the lowest form of order flow here. That's all it holds. And it's being held by Asian liquidity. So yeah. For me, I don't have any limits to put into that. So, but UCAD's very much looking, very, very bullish still. You look over at Canadian futures and we're still very much, sellers are still in control of that market. There's really nothing keeping UCAD from going higher. So, and that's ideally my thought process. I'm just going to continue to move forward with UCAD buys. I'm still holding some pretty decent volume. I'm still holding from all my UCAD buys from like September and October, and even September and October. So that's UCAD, right? UCAD, ACAD, NCAD, AU, NU. The other one I'll talk about is EG. So EG is actually playing pretty decently. I'm just waiting now for, so from a 4-hour perspective, we're still massively just seeing down cycle market cycles, right? We're seeing redistros. So obviously now that we've, created this low, the distribution's maintaining it. And ideally what I want to see is if this is what gets us to go lower or if we go into this. And this is really what I've got my eye on as well, but I'm going to be patient and see if we actually do get up there. What it's kind of setting up for me is this. So from an order flow perspective, right? Order flow is here. All right. Manipulation came in here, swept out all of this. And this Frankfurt price action that really was the cause of this entire push. So this is all just order flow, right? What I'm looking for is we are in a distribution here. And I'm very eager, and I was looking to short it today, but it just didn't come in at the right time. What I wanted to see was price. Let's get down like a 5 minute. So obviously you could see, I wanted to see us come in here. So this is what I took yesterday. I took it out of this 80%, ended up taking some partials, ended up coming back and hitting my break even. So it is what it is. I wasn't too disappointed with it. It was pretty clean, especially for a Monday. Mondays I don't do a lot of trading, but when I was marking up, I just saw it, so I was pretty happy with it. But it did give. I mean, it did give. What'd she give? She gave, all in all, it was like a 1 to 11. I took some partials when we broke the low, paid myself risk around a 1 to 5. And then my next partials was in the 80%, of this. That's where my next partials were, which was somewhere actually, somewhere like right around here, which is like a 1 to 8. So for a Monday, I'm not going to, leave a lot on the table. So I took partials out of that. We haven't invalidated anything though. So we haven't traded above this high. Price, all it did was come back and revisit, and then we redistributed. So here's your accumulation, there's your ICE. We redistributed, and this is where I was kind of hoping that we were going to get another play out of here. So price is actually distributing there now, but it's nowhere close to my trading hours. So, and I have no desire to even look lower time frame on this. So what I'm going to be probably doing is, when I wake up after London Open, if this ends up giving me some redistributions, I'm definitely going to be working the redistributions lower. If for some reason we end up just coming down and mitigating something out of here to go higher, then that's fine too, because what I'm really going to be patiently waiting on is still this move right here. This area here holds a lot of importance for me. This is truly what caused the break here. That confirmed. So it's essentially my slingshot, right? It's the redistribution that did that. And, this could be just a whole bunch of noise, right? Something like this is what I would, when I'm looking at it from a different angle, I can just do something like this and say, what do I have? I have that, and this is still what I want to play out of. So EG is something I'm very, very much interested in shorting. I have no desire to try to buy EG. For me, EG is just massively bearish, and that's where I want to take it to. Targets for me on EG are, obviously I have higher time frame targets because we're in this massive distribution. But what I'm going to be looking for is running price first and foremost into here. This is where I'm going to be looking to take price to. And then, of course, I've got my alert down here because that's my target. Any big sells that I can get out of premium. So even if we come up and we trade out of the distro, I'll tell you right now, if I get into this distro here, I'm holding until we break the 8,200 level. I'm going to take it down for whatever that is, close to 700 pips. And it's just because of, the higher time frame. Higher time frame is massively telling me bearish, bearish, bearish. Let's take this down. And I want to target into this area or into this area. So it's just a matter of how long it's going to take us there, because I can say I want to get into this price action, but if it takes 5 years to get there, it probably ain't going to happen. I would like to know how you do your trade management, especially in swing trades, and how you decide volume to hold on during months. Well, how much to hold is, everything's based off a higher time frame. And yeah, I can tell you this, you want to have a system in place. You don't want to make the decisions while you're in the trade. So I already have my scenarios played out. So when I game plan, like EG, I just talked about EG, right? How I game planned EG, any trades I can get out of premium, I'm going to hold for long-term plays. Obviously right now we're not in premium. So I'm not holding, major volume to get all the way down for 700 pips when we're at a discount. So I'll be taking more partials. Obviously, if we come back up into structure, into this distribution, that's going to be what I can hold for bigger volume. So trade management is probably the hardest part of trading. And I would say this, you work on it just like any sport, any profession, you work on it in your lab. So for me, I work on it in back testing. How would I do this? How would I do that? Run through scenarios and then start writing down rules for you on what you want to do with the management part of it. As far as like the actual trade management, like how I handle it, you mean like organize it? Yeah. That's, I have a huge whiteboard in my office. I know I log every trade when I open it, the anticipated next play, next partial, what I'm going to do, how I'm going to take risk off, how I'm going to take volume off. Like everything for me is organized and dictated to the T. There is no, for me, I don't want to leave anything up for speculation, or I don't want to leave anything up for, oh, you know what? It's Friday afternoon. Let me just close this trade. No, everything is very specific. So, and again, how I like organize myself in that is all through scenarios. I know from just from experience, I know when and why and where I'm going to be doing my next plays and what I'm going to be doing with it. So hopefully that makes sense. All right. So that's EG. That's all all the CAD pairs I was looking at. I'm, like I said, EU, I'm really not interested. I've piqued my interest on GU a little bit here. And what I wanted to see today, I wanted to see this morning if we were going to redistribute and if we're going to break order flow. And we actually did here. So we actually did redistribute and we broke this low. So what I'm going to be interested in seeing is if dollar is going to continue. I don't know why this says reaccumulation. It should be distribution. If dollar is going to continue going bullish on me, I honestly might take an order flow play on GU out of New York's manipulation here. So I didn't want to take anything out of it until we broke this low, which we finally broke the low. So maybe we get like an Asian accumulation that takes us up, and maybe a London distribution here with continuation moves on during New York time. So that's kind of what I'm going to be looking for. I can tell you this from a priority level, GU is at the bottom of the totem pole. I by far have AU, NU, ACAD, NCAD, UCAD, and indices and EG on top of the list. GU is going to be towards the lower end of my priority list. So, if it's one of those, if it gives me the opportunity to short it out of, somewhere in here, ideally the upper level is where I want to get into, because I'm going to be playing the order flow on it. So it's got to be worth the risk, and if I get in off the 50 area and it's 7-8 pip stop loss, this thing's got to go 80 pips for it to even be worth it. And, if this is if I get in right around this 50 level, we're talking about 83 pips to the low, that's going to be pushing it for me. So that may be a reason why I just let it go by the wayside. So GU's there. UChef is not something I really was looking at today. Again, the main reason I'm not looking at UChef is because it's requiring a lot of dollar strength, right? So I do have my eyes on it. You can kind of see I've boxed it out. I've got an alert here, an alert down here. I do want to see if they come in, spring, maybe go higher with it. We are in an area where I do anticipate some kind of manipulation, right? So we've been just bullish in this entire run here. We are in this massive distribution, right? So have we broken the low? Yes, we have. Can price now accumulate here to come up and test this out? It could. However, it's going to be doing that in the slingshot that caused this break. So, UChef is one of those where I don't know which way they're going to go with it long term, but I can tell you that I'm only looking for buys in discount, and I'll be looking for shorts and premium, right? That's ideally how I'm going to tackle UChef. So we're going to be here a little bit, because right now this is only going to move as the dollar moves. And if it gives something, like I said, I've boxed it out. If it gives me something to play, I'll do it. But I'm going to lump this down up there with like GU. It's going to be lower on the priority than the ones I'm really focused on. So that's UChef. The other chef that I'm looking at is Odd Chef, and higher time frame, right? I mean, just look at this. We are walking this down. This almost mirrors what AU is doing. The point of interest that we were looking at last week was simply out of here. right? I wanted to see price give me something out of this, right? This is what's maintaining the order flow. It's the redistribution with the manipulation that mitigates this to the left. We get a distribution, right? That distribution then breaks, confirms, and gives us ideally what I was waiting for was a redistribution. So lo and behold, this thing last week actually did pretty nice. It traded right up into there's a micro distribution that happens here, traded into that 80% very, very nicely. And from that, there we go. From that, it gave another micro distro that happened in here. And what I'm looking to do is now just target this low. This actually gave some pretty good entries. There was one in here, right there. There was one that mitigated the previous Frankfurt. There was the one that came off the limit order. And now, obviously, you can see what I'm looking at. This entire thing now has broken, and we're in this leg. What I'm going to be really focused on is what do we do when we come back into here? What do we do when we come back into this? Because this redistribution is at the 50 of the entire leg. And then, of course, is there an opportunity to come back and mitigate anything up here? So I'm not looking for buys on OddChef. I'm going to be straight up just looking to short this. What I do want to see is, and I'm really not even interested in trying to play anything out of this, but if it's one of those, if it does it, it does it. I was looking this morning, especially out of the redistro that caused the break. I was looking to see if we come right back up, distribute to take it lower. Depending on where we're at when I wake up, at crossover, that's going to be kind of where I'm going to be playing it. But this redistribution definitely gets my attention. It's what's maintaining lowest form of order flow. So we come up and get a distribution somewhere in this 80 level, which is somewhere right around here. That's where I'm going to be looking to target for my entry. And then I'm just going to keep shorting OddChef, from last week's plays. I mean, that thing is, we got in around 64, like 30. So, I mean, it's 120 pips in profit from depending on where you got in. So looking to continue just shorting this off. All right. So that's OddChef. Then the only other things that I'm really looking at again are the Japanese yen crosses. UJ is one. I'm really not interested quite yet. I'm going to be sitting back and just waiting, right? This is obviously an area that I'm really focused on looking to see if I can, stupid trading view, if I can get a potential sell, but just keep in mind where we're at, right? We have traded back into order flow, right? So this is our order flow leg, and we've traded right back into 50% of the redistribution that causes it. So, I'm really going to be waiting to see what news fundamentally comes out on the Bank of Japan, because obviously if the yen appreciates, UJ automatically drops, right? It's diametrically opposed. It's linked, it's pegged to it. So, this is going to be, if I do anything with UJ, it's going to be out of here. And the only way I get into that is out of a schematic. All right. Distributions get me into it. The other yen crosses that I'm kind of focused on, the only other two that I'm really looking at are Euro JPY, and it's going to be the same exact price action, right? I mean, you can see on the 4-hour, we've actually traded in there to today. My alert went off. I liked what we saw. There we go. I liked what we saw coming into it. I like how Frankfurt sweeps it. So now it's just a matter of waiting for price action here, right? So I've got my alerts in there. I'll watch it when I wake up. This is probably going to be one of the first ones I look at, just because of where we are. I like the price action on it. I like what we're doing. And if this thing ends up, if this is the accumulation that ends up coming in to mitigate and then collapsing, if I miss the first move, I'll just play the mitigation of the redistro and keep taking this lower. So that's ideally what I'm doing with EJ. So EJ and UJ, very similar price action. And then AJ is going to be similar as well. What I'm looking for on AJ is coming up into this, right? I'm looking for us to come up into here. I want to see if potentially if that New York price action is what we sell out of, or if we come up into this portion right up here. So, I was looking to see if there was going to be a buy opportunity on AJ, but I really don't like what I saw in here. I also don't like, the fact that I'm trying to buy the Australian dollar, which is already very, very weak, and now peg that in with the Bank of Japan saying that they're going to do whatever they can to keep their market up. Hold on. All right, there we go. So yeah, I mean, EJ and UJ are going to be probably my two favorite yen crosses that I'm going to be looking at. And again, I'm going to be looking to short yen crosses because I'm also really, really interested in shorting indices continuation plays on them, right? Yeah, have a good one, man. Yeah, I'm gonna be looking to short continuation plays on this. So, I was really hoping to get something out of here last week. There was a really good opportunity on SPX and NASDAQ out of here yesterday on Monday. Not so much on U30, never came back. And then obviously I was looking to see if they were going to accumulate in here. Once they took this out, that's it. It's for me, it's smooth sailing. Just look at the selling pressure coming in. I've talked about it before. When they buy up, it's drawn out. Look at the price action here. When they sell, look at every time we get the sell. It's just evidence of, sell orders coming into this market. So I'm going to try to continue playing the sells. There was for me, I've already back tested it. I was looking at it this morning. There was absolutely zero entry for me to take this morning that gave me high probability with low risk. So what I'm going to be anticipating us coming back into is actually sweeping out all of this. I've got my alert right here, and I want to see if we can come back into this. I know it's going to be, it is going to be a long shot. If you looked at US 30 today, it dropped 500 points. So that means that this thing has to move 600-700 points this week. We could see that happen over maybe 2 days. Worst case scenario, if I don't get a pullback, right, what I'm going to be looking for is just continuation moves. Okay. Had New York session today swept out these highs and then broken, well, we would have had a redistribution and I would have played mitigation from it. But neither of the three gave any kind of manipulation during New York session, right? It literally just sold off and never came back. So you could see no manipulation. So if we can trade above this and come into what caused the original break, essentially my slingshot, this is where I'm looking for my shorts. And if we don't get, like I said, if we don't get the pullbacks, like what gets me into this? Well, maybe we do something like this, accumulate, we get a shakeout that causes the break. Ideally, I want this at equities open and then come back to mitigate to short off. That's really what's going to get me into indices this week. I'm not looking to try to buy these. They are very, very much still bearish. And I think we're going to, especially if you look at it from a bigger time frame, right? Like you go back to SPX, anyone pay attention to where we traded into on SPX? It's the slingshot that I've been talking about for a very long time, waiting on us coming back into here. Well, that's the 80%, and smack dab, there she goes. So I'm really just anticipating wiping out all of this here if we can get, I mean, if this is a huge if we can get price come back into premium, I'm going to be holding until we can break the 3,500 level. Did I catch it on SPX? I did not. Nope, I did not. Nope. No, I didn't have a limit on it. The limit was just way too big, man. Yeah, the limit was way too big. So unfortunately, I mean, I was there for it. I was watching it. I wanted, if you look back up in here, there's my limit order just sitting, waiting. As soon as we got this, we just never came back. And then this is where, what day was this? Hold on. What day was this? This was Friday. That's what it was. So I was waiting for price to come back into here on Thursday. We never got it. We came in Friday, but we came in Friday at 3:10 in the afternoon, 40 minutes before it closes. So there was absolutely no play for me out of it. It just came way too late. So it is what it is. Nothing I can do about it. But I did like the price action in it. So yeah. So indices, I'm definitely looking for shorts on it. I will continue to look for shorts. I'm going to be looking to target, again, NASDAQ's the same thing. NASDAQ coming into the slingshot area. I really like where we're trading into. And yeah, I mean, for me, it's going to be very, 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 very important for me to try to catch premium sells, because what am I going to be looking to target new lows, right? This is just a massive distribution that I want to just keep going down, but I'd like to see if we can get some kind of pullback into it. So that's kind of what I got on my game plan. This is it right here. I'm going to be looking at these right here. Actually, I can move. I don't have pendings on them anymore, so I can move these here to here. Where is, hold on. Odd Chef. I think I deleted it by accident. Nope, it's there. Oh, you know what it was? UCAD. That's what it was. Yeah. So that's pretty much that's my game plan for the week. This is what I'm looking at. Trading wise, this is what I've got on the agenda. I was taking a TFT challenge. It's a Royal. Yeah, the Royal. It's what do you mean the drawdown type compared to the standard? Oh, wrong one. Hold on. Do you like to, so far I like it. I'll tell you this. I haven't had a payout on them yet. The one thing I do really, really like about it is the spreads. Those of you guys that trade on TPT, night and day, man. Night and flipping day. So yeah, I mean, 100%. I definitely enjoy the spread. So yeah, I mean, the one I'm doing is the Royal. So what is it? It's what is it? 8 and 10. Yeah. So I don't know what's the difference. What's the standard? Oh, 10 or yeah. I'll tell you right now, like if you're worried about the extra 2%, I mean, I would definitely touch base. I would definitely touch base with your journal and ask yourself, why are you worried about a 12% drawdown? I mean, I can tell you that I have never come close to 10% drawdown a month ever. What's going on with TPT? Honestly, I think they got a new liquidity provider. I mean, that's, I don't know if you guys have ever looked at what these funded firms do. They don't have, I mean, I can call you guys up and be like, hey, let's go and open up a funded account. And, we reach out to some liquidity providers, get capital from them, and then we open up a website, and that's it. Like right now, like if you think about this, right, you're not getting a $300,000 account. You know what I mean? You're not getting that. You're getting, it's a 10% drawdown requirement. So you're getting a $30,000 account worth of liquidity, right? That's what you're getting. And it's not even true 30, like it's not actual $30,000 because that's all leveraged, So a lot of these funded things, like TPT, I'm telling you what they've done, and they have a good marketing behind it. If you look at it, they say, oh, well, we don't charge commissions like other firms. Yeah, but I'd rather pay commission up front than paid in the spread, because the spreads are killing me. It is. It's so TFT. They use ACAP. I like the spreads on ACAP. Things like, obviously, like EU is zero spread, 0 or 1 pipette spread. Things like Odd Chef, we traded Odd Chef the other day. It was like 4 pipettes. NCAT is like 1.1 pips. I'm trying to think what else we trade a lot of. Yeah, I mean, it's relatively low. Am I going to be keeping my TPT account? Yeah. I mean, I'll keep it. I'll keep it. It's based on the equity or balance, whichever is higher. Think it's different compared to the standard. I have no idea. I know it resets every day. So, no, it's not. It's equity and balance. Yeah, it's equity and balance. So it resets every day. You'll get like a drawdown amount. And what's this? This is, yeah, I don't know what this is. Yeah, so I don't know the standard. I mean, I'll tell you this. So phase 1 is 10%, phase 2 is 5%. If you go to the Royal, it's 8% and 5%. So I don't know. Oh, and your leverage is only 1 to 60. Yeah, so why would you even want to do the standard? So you can hold on the weekend. I know you can hold on the weekend on I mean, I don't know. I don't know why you would regular account leverage. Yeah. This is 1 to 200. The standard is 1 to 60, bro. Yeah. Yeah. So like if you are up a 1 to 10 and then the day ends, the drawdown is based on the balance. So if it goes back down to a 1 to 3, if you lost the drawdown percentage, even still in profit, you lost the account. So so let me ask you a question. You're up 1 to, what are you saying? Like, so you're risking 1%, you're up 10%. Why the hell didn't you take any partials, man? So yeah. Most funded accounts are like that. Yeah, that's why I don't risk 1% on accounts. And if I do, you better take some partials at the end of every day. So yeah. Yeah, I can tell you that the way I trade, I have never come close to 5% drawdown on the day, because that's the one that'll get everybody. I've never come close. I mean, I think the closest I've ever come was maybe like 3%, because it was like a news spike that I was in massive profits, and then yeah. So, but I mean, I definitely do like them. I know they pay out. I mean, I think they're right now, I think they're the third, if I remember correctly, third largest proprietary firm. So yeah, pretty good. They're pretty good. Yeah. Yeah, we'll see. We'll see what they do. I like their spreads. That's the big selling point for me. I get into trades, and before I used to lose so much because of the spread, adding to your stop loss or to your entry, and knowing that like on TPT GU is like 1 pip spread. GU on these guys here, sometimes it's like 2 pipettes. I mean, that's if you think about it I mean, that's cutting. TPT is cutting close to 12 to 15% of your profits out just in the spread. Yeah. The spread with ACAP or purple ACAP Have I back tested the VIX? For what? For trading? I don't trade the VIX, bro. No. Have I back tested it to use when I'm trading S&P 500? Yes, I have. Yeah. You mean, have I tested it for SPX? Yeah, yeah. So I use the VIX. I'll use the VIX to kind of determine some bias. But I'll tell you right now, they don't always correlate, right? I mean, the VIX is, if you think about like it, all the VIX is the, for those of you guys that don't know, it's the volatility index, and it's essentially the fear factor for the S&P 500. So I would tell you this, it's all just organically manipulated. So I personally don't trade it. I have no desire to trade it. Yeah, but I definitely use it. I'll look at it, and the only thing I'll do is because the chart itself is not a true, it's not a true like technically driven chart. It's all just, yeah, I mean that's what it is. It's just it is an organically created chart, just like any of the other indexes there. So yeah. Yeah. So I mean that's pretty much it. That's everything I'm looking at. Anybody else looking at anything else? If not, man, I'm just gonna grab. Did you go over NJ? I went over AJ. I'm really not interested in NJ, but I don't know what anybody's looking at. What are you looking at for NJ? I don't even have it in my secondary list anymore. I came late for NCAD. Yeah, I mean, I'm still waiting. I mean, we haven't invalidated anything from this morning, so I'm very much still looking for shorts. I'm just going to wait. I'm going to wait till we redistribute from today's price action. Yeah, I mean, on NCAD, I mean, just look where we're at. We are. So you're bullish here. That's where you're bullish at. We've accumulated, and now we're technically in this distribution that has yet to break this high. So like if I'm going to buy it, if you're buying it now, you're buying it at very, very premium pricing. And if you're selling it, you're selling a bullish market. So yeah, for me, there's not a lot that I want to do with this. We should have, when price broke this high, we come back in and then we just dance around for the better part of a week. So there's really not much I want to do with it, especially knowing what the Bank of Japan wants to do with the Japanese yen. So I honestly think that this is going to be a distribution. Maybe it does something like this, manipulates these highs, and then we go lower with it. Yeah. Yeah, no worries, man. No worries. Yeah, on NCAD, it's simple. Just wait for the redistro. Yeah. I'm just waiting for the redistro. Like tonight, if I get up I'll be up after I will be up after London Open. I'm just going to play this. Yeah, I'm going to play. I want to see the redistro. I want to see the redistro. So I want to see manipulation, and then we break down. That's what I want to see. What's the lowest time frame on MT5 being the 1 minute? What's your best tips for getting the most precise entry when you're looking at like a 5-second schematic on TradingView? Yeah, the prices will be off, but not the stop loss. So like if you're going to get in off of, if you're going to like, let's just say that, you got an accumulation on the 5-second and you want to take the 80% of that. Well, it's simple. You're marking it up on TradingView, right? You're marking it up on TradingView. So if this is a 15-second chart, well, just count it off. You know that your entry, let's say if you're going to take it off the 80, your entry is 4.3 pips. So just put your stop loss on MT5 at that low, and it's at 85,719, add 4.3 to it, plus your spread. So that's all I do. I just measure out, like if I know that on MT5, I just put my fib on it. I don't, a 1 minute chart, you're going to see your distribution and accumulation on the seconds time frame. You don't actually need it. So thoughts on UCAD? Yeah, man, just rewind on YouTube. I'm looking for buys. I'm looking for buys on it. Yeah. So, but that's how I kind of just, when I jump over to NCAD, or not NCAD, when I jump over to MT5, the first thing I do is I'll go to whatever time frame I can, relatively look at and say, okay, this is what I want to do. I get my fib out, I measure my fib, and then I just put my, I have my lines already with the PSC. I already have, my stop loss and my entry lines. So I'll move my stop loss line up to that high. I'll put my fib on it, and then I just drag my entry. Or if sometimes it's just easier to put the numbers in. If I know that my stop loss is 86,330 and I have a 2.5 pip stop loss, then I'll just come in here and I put the 2.5 right into the numbers. Obviously it'd be like 31.5. So 86,31.5, boom, it puts right in. And then I add my spread and my stop loss, say it's like, I don't know, half of a pip. So that goes up to 83.4, and that's it, and then I'll hit the take profit button, move my take profit lines wherever I want to go. So I mean, I don't struggle. I used to struggle with MT5 a lot as far as like getting orders filled, but like anything with experience, you get it streamlined to the point where, I mean, some of you guys know, when you guys are on a Zoom call with me, I'm trading 3-4 different accounts sometimes, and I set my limits, or I set my orders on all 4 of them at the same time, almost, with using the PSC and stuff. So do I look at bonds? I do look at bonds. Do I look at bonds to trade, or do I look at bonds to use to see what the heck I'm doing with like the dollar index? I don't trade bonds. No. Yeah. But T bonds are really good to look at. Yep. Yeah. I use it to look at what the dollar index is doing. Yeah. The 10 years are a really good one to go off of. That's the one I really pay attention to. I think, actually, I think the 10-year, what did we break today? I know we started going a little up today. Yeah. As long as we're not over 4, but we should be going up there pretty soon. Yeah. I guarantee you, we go higher with this, especially if interest rates continue to go. So this is really just mimicking the dollar index. Like if you follow what this thing is doing, we're just mimicking the dollar index. So yeah, we'll see what it does. What do you use to speculate with what the market is doing? What do I use to speculate with what the market is doing with bonds? So, I mean, this is the 10-year is like the main catalyst for your interest rates. So if you know what the Fed is, if you listen to what Powell is saying, and he did a little spiel, little talking, like a interview on Thursday. If you were paying attention to what he was talking about, and then you can jump over and I'll tell you right now, I could care less about the technicals on this. I don't pay attention to anything on technicals with this. What I care about with the 10-year is I care about exactly how they're trading it. How funds are trading the 10-year is simply off of moving averages, and then off of exactly what the Fed is doing. So do I feel like we're going to come back into this reaccumulation here? Yes. Do I care about where we come into it? No. All right. But I'll tell you this, I don't feel like we're going to come anywhere below 3% on this, as long as the Fed continues to raise interest rates. All right. If you think about it, the Fed is increasing funds rates, right? That means that this, by default, every time the funds rate goes higher, is going to increase. So, if you're looking at an investment, say you're a fund manager, right? And you are looking for, well, first of all, you got to ask yourself, are you in a position in the current market conditions to take high risk, high yield, long shots, right? You said it kind of, so this is where I'm going to get with it, right? This is how it correlates with indices. Let's break it down like this, right? And this is where you have to understand the economics. Okay. We have indices, right? So essentially indexes that are being traded, right? And individual stocks. So let's just say we all got into a fund and we purchased the S&P 500 back in March of 2020 at the COVID lows. All right. At some point, and if you look at, so here, let's go down the rabbit hole on this. At some point, right, the average yearly return on the S&P 500, all right, is actually here. We'll go over. Yeah, the average yearly return on the S&P 500 is typically anywhere between 6 and 8%. All right. So just think, and this is where you have to think about it. I think a lot of traders, and I was like this when I was younger. When I first got into trading, I would simply just look at the charts. Okay. But if we look and we just say to ourselves, realistically, S&P 500 has anywhere between a 6 and an 8% return per year, right? That's on full steam. You know, we've got the engines rolling, and that's typically this is why well, let me ask you this. Who is the largest, what makes up the largest conglomerate of investors in the S&P 500? Anybody know? Anyone want to take a guess? No idea? Nope. It's not a bank. I said a conglomerate. What makes up the largest investment pools? Hedge funds? Nope. All right, I'll throw it out there. Retirement funds, 401ks, retirement funds. If you look up every major, you look at like the United Teachers of Dade, you look at the New York Police Department, you look at the, you know, I mean, you can look up the largest unions, the largest 401k contributors, the largest retirement funds. They all invest in the S&P 500. And I don't remember what the number was, but it was something like in the mid 60s. That is, and think about it, 401ks, retirement funds, that's blue collar workers, right? That's people like me and you. That's not multimillionaires. That's not, you know what I mean? So the biggest conglomerate of money being pulled is out of retirement funds. So obviously, if I'm working and I have a retirement fund, I'm not managing this, right? This is through a managing partner. This is through a managing fund. So let's just say that we're all in COVID, and obviously, because this is what I told my mom in her 401k, just start, you know, putting money into, because she has the option of where she could put her weekly dues or her weekly allotments into. And I said, just start buying up the S&P 500. So let's just say that these guys came in and now they bought all the way up to the all-time high. And like I said, yearly return of 6 to 8%. So in the matter of 24 months, S&P 500 saw 118%. Okay. So let's look at it this way. We all just made 118% in 2 years. What are we doing now? What do you do with your money at this point? What do you do with your money that you have in the S&P 500? You start taking profits? What do you guys think? If you just made realistically over 12, almost 12 times what you normally make in a year, what do you do with that? Yeah. Funds start to take profits, right? They start to take profits. Now you compound it. What do you mean you compound it? Compound interest? But how do you compound interest? First of all, you're going to diversify, right? So what do? You reinvest it? Okay, sure. Absolutely. You reinvest it. So if you look at, you use your profits to buy more. Yeah. But at some point, you don't want to continue to buy the highs, right? Because then you're not taking your profits to buy, right? So what do? What they do is they take profits and they wait for a rainy day. Now, I'll tell you right now, if you cost dollar average on stocks and indices, you're going to go broke. And any fund that manages it that way is idiotic, because you're going to run out of funds. So what do? They pull money, right? A little bit at every junction high. They'll pull a little bit out. And where are they going to put it? They're going to wait for a rainy day. Anybody pay attention on Bloomberg 2 days ago when they interviewed Berkshire Hathaway? What did they say? Berkshire Hathaway manages over $440 billion in asset funds. Do you know how much money they have in cash right now? $250 billion. That's what they have in cash. So what do? In all of their plays, in all of their stocks, in all of their everything, they took profits. Somewhere in here, they took profits. And what do? They sit on the sidelines with cash, waiting for a rainy day, waiting for the market to pull back. Let me ask you a question. So we just made 118% here, right? And we cashed out. If the market goes higher, did we lose money? No, we lost nothing. We still have our 118%. Now, if we cashed out and the market comes down here and we reinvest that 118% in here, and now we take 118% and we reinvest it for another 100%, now you just made 218%. So when these funds start to take profits, right? Because that's what they have to do. They're going to move money around. They're going to reinvest it, right? Where are they going to park their money? So you just made 118% here. Where are they going to park their money? We know that there's a recession on the horizon. This is 2021, right? We know a recession's on the horizon. We know inflation is starting to take hold. We know that that the Fed is going to raise interest rates. So absolutely. Why not put it in treasury bonds? Why not put it in the US dollar, right? Because if we go and look at what the dollar index has done, right? So this was the COVID spike. This is where on S&P 500, right? This is where funds took profits. So in this move here, they made 118% on the S&P 500. And they said, we need to put our money in government because, right, G funds is your safest. It's almost, think of it like a safe haven for bonds and stocks. By doing that now, they've been able to run and get an extra 28% by putting it in probably the safest avenue they can. Does that make sense? So when we start to see the dollar depreciating like this, there could be several reasons. But what we need to see is whether or not the same entities that sold S&P here, invested into the dollar here, are they pulling their money out of here and getting ready to go into stocks, bonds, whatever they're going into? If they're going to do that, right? If they're going to go risk on and start investing again, all right, that's an area where we need to pay attention. Now, the question remains is, are they just pulling their money out and waiting on the sideline like Charlie Unger? Or do they have their money in and they're just waiting for price to come back a little lower so they can make the next run up? Because if you look at it, what reason do they have to be investing currently? For me, there's no reason, right? We haven't hit any bottoms on anything. Stocks are still selling off. We're in a recession. The Fed is putting into place, implications for businesses or creating an atmosphere for businesses not to expand. So we're not going to exit this recession anytime soon. They're trying to do this to curb inflation, but what they're doing is they're just breaking the backs of everybody who's working because your dollar isn't going as much, you know. So the Fed is indecisive. And this is why everybody knows that the Fed has a YouTube channel, right? That you can go on there and watch all the videos and you can listen to what Powell is saying. Definitely dive into it. I know somebody asked me the other day if fundamentals was really a big key in understanding what the market was doing. And I'll tell you right now, you really are doing yourself a disservice if you're not paying attention to the fundamentals. If you're not watching and looking to see what is actually going on from an economic standpoint, then you're already kind of falling behind the eight ball because for me, I use the fundamentals to dictate what I'm going to trade, and then I use the technicals to get me into those positions. So, yeah. So, yeah. Anyway, but that's the relationship the dollar index, T-bonds, and indices have is when you can put. And the easiest way to put it is look at COT reports, right? They're delayed reports, but you can look at where money is being moved. When you see money being moved out of indices, out of stocks, and being placed into government-backed bonds, that's telling you that they're finding a place to park their money. They can't cash out. They can't put it into a bank, right? Because then capital gains takes over. So what are they going to do, right? They're going to park it so they can reinvest. Yeah. How delayed is the reports? So it depends on the actual asset that's being traded, but typically they're a month delayed is typically what they are. You can, like, if you're doing stuff like commodities are, I think, every first and third Thursday of the month it's released. But there's a schedule. You can go on there, but they're delayed. I mean, I'll tell you this, it is no help. I know people that are like, oh, well, we check COT reports to determine how we're going to trade. Okay. For me, I'm not trading off like the monthly and the weekly and the daily timeframes, so it doesn't help me. Yeah. Go into Google and just type COT reports. There's a bunch of websites, yeah, there's a bunch of bar charts has it. You can go on, yeah, there's a bunch. Just, honestly, it's all the same data. They pull it through API data through the actual CME, the Chicago Mercantile Exchange. So it's all being taken out of the CME. You can go right to the CME's website, but it's whatever color and backgrounds you like. That's really all the websites are. But yeah, I mean, so that's everything I'm looking at. I'm getting a little hungry, so I'm gonna run. I'm gonna go grab some. My dinner's getting cold for me, but hopefully that kind of made some sense on understanding some of the fundamentals, and then hopefully you got an idea of what I'm looking at for the week. So yeah, absolutely, awesome. Yeah, cool, awesome. Well, listen, if you guys have any questions, hit me up. If not, I will catch everybody later. Thanks for hopping on.